Floridians are underwater in their homes, struggling to make their mortgage payments, and the government is a little slow in coming up with the rescue attempts. What is a homeowner to do?
I know, let's all file bankruptcy. That makes it all better.
Does it?
Good morning, my name is Ron Morris. This is Moving Forward TV, your local real estate and mortgage update.
And I am Delynn Gaston. Thanks for joining us today. We are speaking about foreclosures, short sales, and bankruptcies. Oh my.
Today we're bringing up the topic of bankruptcies, foreclosures, and short sales. Delynn and I are seeing on a more frequent basis a big misconception out there from the general public.
Now, before we get started, we realize that most of our viewing audience are realtors, and for the majority of you out there, you already know all of this stuff. However, it's your clients, anyone who you have maybe sold a home to in the last 5 to 7 years, or even a current client who is not familiar with this. And primarily what we're talking about is when somebody files bankruptcy, how and if it affects a foreclosure and a short sale. Big misconception out there.
We are seeing more and more people fall behind on their mortgage payments. Whether it's a job loss, an injury, or divorce, we're seeing more and more of this. Now, there are options out there. Number one, you could sell your home. Number two, you could short sell your home should you owe more on your home than the property is worth. Number three, you could go to foreclosure. And of course, number four, you could do a deed in lieu of foreclosure.
Now for the misconception part. When it comes
There's a misconception?
To the bankruptcies. First of all, let me start by saying we're not attorneys. Please, we're not attorneys.
But we play one on TV.
Please seek legal advice from a bankruptcy attorney before considering anything like this. But in general, let's go over the bankruptcies and how they affect a foreclosure or short sale or a deed in lieu or whatever your options might be. There's two types in general, two types of bankruptcies for consumers out there. Number one is a Chapter 13 bankruptcy. Under a Chapter 13 bankruptcy, that's the one that can stop a foreclosure. So if you're behind on your mortgage payments and you're behind on pretty much everything else, you can file a Chapter 13 bankruptcy. And of course, there's income limitations and things like that. But you file a Chapter 13 bankruptcy, and basically what it is a reorganization of your debt. So they take everything that you owe, including your mortgage payments and everything, and put it into a comfortable payment for you. And you make payments to the bankruptcy court.
And that could take several years, depending on
the usually that's like a 5-year kind of process. And that's fine. The second type of bankruptcy is a Chapter 7 bankruptcy, and under that one, this does not stop a foreclosure, nor does it relieve you from the debt of a mortgage. Neither one of them relieve you from the debt of a mortgage, but under Chapter 7 is they wipe everything out. Basically, the court determines that you don't make enough money or don't have enough assets to be able to pay all of your obligations, so it wipes everything clean. And there's income restrictions on things like that as well. However, with a Chapter 7 bankruptcy, you can put in your arrearage. In other words, your late payments can be written off in the bankruptcy, and whatever amount that you're underwater on the house can be written off in the bankruptcy. However, not the whole mortgage obligation, and that's where the big misconception comes in. A lot of people seem to think just because I filed bankruptcy and my mortgage was included in the bankruptcy, I'm clean and I'm off the hook. Not the case.
Seek legal counsel.
I bring this up because I recently had a phone call from a client who had a bankruptcy in 2009. They waited 2.5 years and they wanted to buy a home again. When I looked at the bankruptcy papers, I saw that they did have a mortgage in their credit report. I saw that they did have a mortgage, and asking her what happened with the house, she thought she was under the impression that because she filed a Chapter 7 bankruptcy and she thought the mortgage was included in her Chapter 7 bankruptcy, so she thought she was scot-free. Keep in mind that's not the case. Again, what was included in her mortgage was her late payments, which was fine. It was allowed, and it was a Chapter 7, and she owed $150,000 on her mortgage. The home was only worth $100,000, $102,000 or something, so that $50,000 was able to go into the bankruptcy. But the bottom line is that she still owed that $100,000 until the bank forecloses or she sold the house in a short sale, she is still obligated on that debt. And that's where people don't realize it. You are not off the hook from filing bankruptcy until the deed changes hands. In this case here, she had the house on the market, and eventually she was trying to short sale the house, didn't get any offers on it. It did eventually go to a foreclosure, and we have to go off of the date of the foreclosure. So just keep that in mind. It's from the date the deed transferred to another person. That's when they're off the hook from it.
Okay, the question that we get all the time, should I do a foreclosure or a short sale? Which is better? What direction should I go? Hands down,
short
is a
sale,
short sale.
Short sale, short sale.
You can recover quicker.
Yes.
You're able to purchase quicker if you do a short sale compared to a foreclosure. Hands down, no question about it.
Not to mention the negative impact on your credit score and your credit report for a longer period of time. Short sale, short sale, short sale is the way to go. That's our show this week. Thanks so much for watching. Again, we realize that a lot of you already know this information, but this is a show. Please forward it out to the people who don't know this information.
And if you need some more clarification about time frames, whether it's a foreclosure, bankruptcy, any of that type of information, reach out to us. Give us a phone call, an email. We have this handy-dandy chart that I'm never more than a few feet from because they seem to change it all the time. But
we'll email it out to you, and we'll email this little chart, and you can hang it up in your office as well. I also wanted to mention real quick that we are sponsoring a CE credits for you guys, a class on March 7th at the West Pasco Board of Realtors. So if you're interested in doing that, please let me know. That's our show. We appreciate you watching. We are Today and Every Day.
Moving forward, we'll see everybody next week.
Bye-bye.